OK, Alex， 杨教授，你要不要先开始？
So good morning, everyone. Welcome to this webinar of the Asian FinTech Alliance. So today we are going to talk about the regulatory perspectives on FinTech innovation in Taiwan, and I'm the moderator, Yueh-Ping Alex Yang from the National Taiwan University College of Law. Please feel free to call me just Alex for the convenience. So today we will have two speakers from our Financial Supervisory Commission to share with us their perspectives on the FinTech regulation and development. But before proceeding into their respective speeches, please allow me to welcome Ms. Jacqueline Tsai to give us some words in advance. Please, Jacqueline.
Thank you, Alex. Good morning, everyone. Thank you for joining AFA monthly meeting. I'm Jacqueline Tsai, chairwoman of Asia FinTech Alliance. Today we have attendees from various parts of Asia. Most of them are invited by AFA members. And AFA is an international platform launched in 2023, conceptualized as an alliance of association. In AFA, each economy is represented by one leading FinTech association. And currently we have 15 members representing 15 economies, including Taiwan, Korea, Japan, Singapore, Malaysia, Hong Kong, Philippines, Indonesia, Thailand, Mongolia, Cambodia, and Vietnam, India, Nepal, and Sri Lanka. And this monthly webinar provides us with an opportunities to share the latest development and policies and insights in the FinTech industries from different countries. And today, it's Taiwan team turn to host this month's webinar. And as an honorary chairperson of Taiwan FinTech Association, I'm excited to introduce today's speaker, two of Taiwan regulators, Brenda and Alex. Thank you for accept our invitation. And actually, Brenda and Alex are key government officials who shape the FinTech environment and regulations for Taiwan. And one of the AFA missions is to achieve regulatory harmonization. And in field of FinTech, we share the same technology and face the same risks. And despite our differences, we can work together to find common ground and establish best practice, not just in industries, but also in regulations. And we are pleased to welcome regulators from various countries who have joined today's webinar. And we look forward to engaging interactions and insightful exchanges during Q&A session. And it is my pleasure to introduce today's moderator, Professor Alex Yang from National Taiwan University. And Professor Yang is a highly respected academic and an expert in FinTech, financial regulations, and AI in finance, etc. And his research and insights has significantly contributed to the FinTech ecosystem, both in Taiwan and internationally. And beyond academic, Professor Yang actively engaged with industries and regulatory bodies and bridging the gap between theory and practices. And we are honored to have him here today to guide today's discussion. And thank you again for all the participants. And thank you for Brenda and Alex to accept today's invitation. Okay, so Professor Yang, floor is yours.
Thank you, Jacqueline, for this inspiring opening. So please allow me to proceed into our speeches session. So we will start with Brenda and then followed by Alex. And before that, let me explain a little bit the rules of today's webinar. So we will have 20 minutes of speech for each speaker, which will take 40 minutes in the total. And after them, we will proceed into the Q&A sessions. We will reserve 20 minutes for the Q&A, but if needed, we can definitely extend that. Please feel free to write down your questions in our chat box or raise your hands during the Q&A session to pose your questions. If you write down your questions in the chat box, I will be responsible for reading them and shooting the questions to the referred speaker. So if there's no further question, let me introduce our first speaker, Brenda Hu Zehua, the Director General of our Financial Supervisory Commission's Department of Development and Innovation. For your background information, the Department of Development and Innovation is a newly established department under the Financial Supervisory Commission in charge of the financial innovation issues, including the FinTech. So Brenda will be sharing with us her observation and her plan for developing the FinTech and a general idea of the financial innovation in the financial industry. So please join me in welcoming Brenda for her speech. Brenda, the floor is yours. You will have 20 minutes. Thank you.
Thank you, Professor Yang. So do you guys can see my slides on the screen?
Yes.
Okay. Chairman Cai, Professor Yang, Director Huang, and AFA fellows and participants from various economies. Good morning. I'm Brenda Hu. Thanks for having me at the AFA webinar. I'm excited to be here to talk about Taiwan's FinTech strategies and progress. Let me see. Okay, before we get into details, I'd like to start by emphasizing our strong commitment to FinTech innovation. Our vision is clear, making Taiwan as Taiwan's leading FinTech hub through strong collaboration between the public and private sectors. We emphasize the collaboration because we believe that true experts are often found among the people. While our commission may help shape policies and measures, it is the drive of our enterprise to push forward that truly makes the difference. We strongly encourage market participants to share their ideas on what changes they'd like to see to enhance digital services. Our commission stands ready to provide them with support. We have made much progress by carrying out various measures and have seen increasing participation rates in the FinTech ecosystem. I will mainly talk about those measures and progress today. Our approach is built on three pillars: co-learn, co-create, and co-thrive. This collaborative spirit is the heart of our strategy. From past experiences, we have seen that when market participants to pitch new business models, our staff from different bureaus often have a hard time fully understanding the core ideas. This has slowed down the growth of digital finance. So to fix this, our department launches education programs for our colleagues in the commission and makes sure most staff get involved whenever innovators introduce new technologies or business models. We have also set up task forces that bring together people from financial institutions, regulators, and self-regulatory organizations. The goal: to learn together, build together, and grow together. Our chairman, Mr. Peng, took office on May 20 last year. Just 2 months later, on July 16th, he introduced the 5 strategies for FinTech development. Since then, we have carried out several initiatives, and some have already started showing results. Let me walk you through them. First, we are creating more room for FinTech innovation. We have 2 policy tools similar to a regulatory sandbox. the business pilot test, and innovative experimentation. Both of these often lead to regulatory adjustments when the test results are positive. In the past, our business pilot test only allowed testing in cases where regulations didn't explicitly prohibit it. This meant that financial institutions could only experiment within areas approved business, within already approved business area, or areas requiring direct approval from our commission. On October 29th last year, we kicked off phase 1 expansion, just like the pink rectangles under the lower part of my slide. We allowed financial institutions to test the areas that goes against the self-regulations and administrative rules. This move shows our commitment to embracing innovation and encourages financial institutions to push for change. As of the end of January, our business pilot test program has been buzzing with activity. We have received 109 applications, approved 94 of them, completed 70, and have 23 still in progress, covering banking, insurance, and securities and futures. That's a big leap forward compared to earlier stages. Right now, we are working on amendments to the FinTech Development and Innovative Experimentation Act. We are looking to introduce new provisions and move into phase 2 expansion, which would allow testing even in cases that might conflict with FSC regulations authorized by law. The second policy tool, similar to Sandbox, is our innovative experimentation. We have been running innovative experimentation for 7 years now, and while successful cases have led to changes in laws and regulations, regulators have become extra cautious when reviewing proposals. This cautious approach can discourage innovators, and to make things worse, the rigid structure of the experimentation process has made it less appealing. That's why we are looking to make some changes. We are making 3 big improvements, simplifying the steps as the first one on your left-hand side. We are cutting down on paperwork and streamlining the review process. So not every proposal has to go through a long approval or full committee review. The second one, giving more transition time. Successful innovative experiments, especially those trying to apply for financial licenses after graduating from the experimentation, will get extra time to smoothly move from testing to real market operations. And the third one, expanding what can be tested. We are opening the door for pure technology innovations, not just those tied to regulatory changes. In this way, FinTech companies may gain industry attention and business opportunities. The second key strategy is collaboration. We truly believe that working together is the best way to drive FinTech innovation. Here's how we are making it happen. So from your left-hand side, we have this patent and licensing innovation. Last August, we published clear guidelines on how financial institutions can handle FinTech patent licensing. Now they can treat their FinTech patents as intangible assets and license them to others. But if licensing becomes a core business activity, they will need to spin it off into a separate entity. Some big players like Taipei Fubon Commercial Bank and Cathay Financial Holdings have already started licensing their patents. This is a win-win. Small financial institutions can access new technology without huge R&D costs, while larger ones have more incentive to invest in innovation. And at your right-hand side, FinTech Industry Alliance. With our Commission's support, the FinTech Industry Alliance was launched in February this year to drive collective innovation. The Alliance brings together working groups focusing on R&D, cross-industry and cross-sector collaboration, new business models, and FinTech investment funds. We also encourage financial institutions and FinTech companies to team up and create cutting-edge solutions together. And the third strategy lies on real-world asset tokenization and virtual assets. Taiwan is actively exploring the potential of RWA tokenization and figuring out the best way to regulate virtual assets services providers, VASPs. Right now, 13 financial institutions and the Taiwan Depository and Clearing Corporation are running RWA tokenization proof of concept. The first phase is all about tokenizing domestic and foreign bonds, as well as mutual funds, using tokenized deposits and wholesale CBDC. The RWA tokenization task force is aiming to wrap up the POC verification by the end of September. We are also accepting applications of a pilot test on virtual asset custodial services by financial institutions. So far, 4 banks have already joined our consultation meetings for virtual asset custodial services pilot tests. They will be working with crypto exchanges and using multi-signature and HSM to secure cold wallets. If all goes well, we expect them to submit their formal applications before April. As for regulations, a dedicated VASP Act is expected to be sent to the Executive Yuan for review by June. My colleague, Director Alex Huang, will give you more details on his presentation. The fourth strategy focuses on driving the growth of digital finance. We are rolled out 3 key initiatives. The first one is digital-only banking. Last year, we relaxed the financial requirements for banks acting as fund distributors. Instead of requiring them to maintain a net worth above par value, they can now qualify based on capital adequacy. Just last week, we made it easier for banks with trust business to apply for full discretion investment or investment advisory services. This means digital-only banks could soon offer robotic advisory services. On top of those, digital-only banks now can handle services with offline support, such as identity verification for corporate account openings, mortgage collateral processing, and participation in syndicated loans. They are also allowed to partner with telecommunication companies to promote insurance products. The second one is digital insurers. We are making it easier for financial institutions or market participants to apply for digital insurance company license. We are loosening up restrictions on its business scope and operations, giving innovative products and services a protection period to encourage growth, and also lowering the minimum paid-in capital needed to start a digital insurance company. And we also allowed foreign digital insurers to set up a branch in Taiwan and also ease founders' requirement. And finally, we remove applications deadline. So every time when the market participants would like to apply for the digital insurance companies, they can do so. You may stay tuned for more details in Q2 because we are going to announce details in Q2. And the third one is seamless authentication. We are setting up the Financial Fast ID Authentication Center to streamline digital identity verification and data sharing. Some banks have already set up FIDO servers, fast identification online servers to verify customer identities using biometrics or patterns, etc. And we call those banks IDPs, identity providers. Other financial institutions like insurers and securities firms can use the verified ID data from those banks to authenticate customers. And we call them RPs, relying parties. The authentication center will connect all IDPs and RPs, allowing them to share verified customer identity and data with the customer's prior consent. In this way, customers only need to register their identity in one financial institution, and they don't need to go through a long journey of ID verification every time they apply for different financial services. A 16-member pilot consortium has been formed and are now in the consultation process, preparing their application materials. We expect to see their formal application for pilot testing soon. The fifth strategy covers our FinTech development roadmap, aiming to take proactive steps to shape the future of FinTech. The first one is new department. Our department, Department of Development and Innovation, is newly established on January 1st this year, with the goal to create an ecosystem that facilitates the digital financial services, boosts market development, and ensures sustainable growth. Right now, we are interviewing market participants to get their thoughts on how we can increase our market competitiveness. We have already gathered some great insights and will put together a financial market A+ project after all the interviews to map out a plan for market reform. And to its right, prioritizing financial inclusion. We have rolled out a fast-track approval process for FinTech innovations that help promote financial inclusion. Applications for business pilot tests in this area will get priority when it comes to review and processing. And to its right, optimizing regulations. We have set up 4 ongoing platforms for banking, insurance, securities and futures, and innovation to gather feedback from academics and experts on how to improve our rules and regulations. These 4 platforms hold quarterly meetings to review proposals of regulation adjustments, exchange views, and make suggestions to amend current regulations and rules, or to change how things are done by regulators and industry groups. This approach helps build better understanding between regulators, financial market infrastructure operators, and financial institutions, pushing forward positive changes in the legal environment. And for the bottom 3 areas are what we have been focusing on right now. The first one is joint defense against fraud. Our financial fraud cases is increasing. According to the anti-fraud dashboard, the total amount of fraud across Taiwan last week hit $47 million, with more than 3,700 reported cases. The total property loss from these scams was about $26 million. To fight this, banks are using technologies like federated learning AI detection and behavior big data analysis to strengthen fraud detection and prevention through collaborative defense. And in the middle one, AI agents. Our financial institutions are teaming up with fintech companies to implement the AI system, shifting from robotic process automation to embedded finance and now to agentic AI applications. Right now, these AI agents are being used internally and haven't been yet used for customer-facing services. But as we know that financial institutions see the potential and are investing heavily in developing related services. And the final one is RWA token exchange. During the POC process of RWA tokenization, we realized that it would be really valuable to have an independent third-party organization acting as the RWA token exchange. So we have asked the Taiwan Stock Exchange to look into the feasibility of creating one. Our goal is to build a multi-asset RWA token exchange with building international interoperability. Taiwan is making huge progress in building a dynamic and innovative fintech ecosystem with a collaborative approach, forward-thinking fintech policies, and a focus on emerging trends like RWA tokenization and AI agent. We are committed to making Taiwan a leading fintech hub in Asia. As the saying goes, technology is a powerful tool, but its value depends on how you use it. We believe that ongoing conversation and collaboration between the industry and the regulators are key to unlocking the full potential of technology. We are looking forward to your active participation in the upcoming Q&A session and hope we can shape the future of fintech together. Thank you.
Thank you, Director General Hu, for her insightful sharing. I hope and I'm sure that you have learned a lot that while this newly established development is doing a lot of works during these past 2 months. But I can assure you that there are actually more they are doing, but which are not really shared today. The department has really a lot to do. So thank you for your sharing again. So let me move on to our second speaker, Alex Huang, from the Director of the Securities Firm Division of the Securities and Futures Bureau of the Financial Supervisory Commission. And he will be sharing with us Taiwan's journey in virtual asset regulation, which is a really contemporarily hot topic in Taiwan right now. So you will also have 20 minutes for your sharing. Alex, the floor is yours.
Thank you, Professor Yang and Chairperson Chai and Brenda, my colleague, and AFA fellow members. I'm Alex. I'm responsible for the crypto regulation and the supervision on the VASPs. And I'm very pleased to join today's webinar to share the recent developments on the regulatory issues in Taiwan. As regulators across the world are stepping up their efforts to regulate the crypto activities. There are different approaches and paces taken by different jurisdictions. So we are watching closely the regulatory framework recommended by global standard setters, such as the FATF, the IOSCO, and the FSB. And we're also watching closely the regulation implemented by many countries, including recent developments in the United States. So we are trying to gradually bring the crypto activities into the regulatory perimeter in a so-called balanced way. So I will walk you through the recent developments on crypto assets in the past few years in Taiwan. From this slide, you can see that regulators can choose different ways to mitigate risks and enforce innovation. For the FSC, we also try to balance different objectives to regulate the crypto. On the one hand, we amend rules to ensure consumer protection. to prevent the VASP from taking away clients' money or assets, we also implement registration requirements and enhance internal control to mitigate the money laundering risks. In addition, the crypto are also widely used for payment purpose, and it might also affect the payment system. That's why we also will consider the mechanism to ensure monetary control and the financial stability. On the one hand, we encourage financial inclusion and innovation, just as Brenda has introduced. So we try to take proportional supervisions and not to stifle the financial innovation. For example, banks may conduct the crypto custodian business on experimental basis, and financial institutions are exploring the RWA business, as Brenda has introduced earlier. I would like to stress a little bit that sometimes these objectives have conflicts. For instance, the P2P trading on the blockchain may increase money laundering risks, but it can also potentially improve financial inclusion. So how to balance these different goals is a major challenge for the FSC. And according to a survey conducted by Cambridge University, while many countries are still taking the wait-and-see approach to encourage financial innovation, but more and more countries are trying to bring the crypto activities within their regulatory perimeter. So according to this survey, crypto activities remain unregulated in 43% of jurisdictions. And crypto activities are banned in the 12.6% of countries. So in these countries, engaging in crypto transaction, mining, ICO, or running exchange are prohibited. So in other words, they try to isolate this sector from traditional finance and from the real economy. And banks are banned from engaging crypto-related activities. For the other 44% countries regulating the crypto activities, they are basically regulated based on AML framework or introducing a comprehensive or bespoke regulations to regulate the crypto. So in short, countries are gradually regulating the crypto activities and the VASPs in different way, paced but toward similar direction. So for Taiwan, we gradually introduce regulatory framework as we might divide it into 4 stages as shown in this slide. Basically, we start regulate the crypto based on AML regulation. And right now we are in the stage 3, which is a registration framework. And we are looking to enter into the stage 4. Right now we are proposing a new bespoke regulation on the crypto. And very coincidentally, the draft of the crypto law will be announced today. So let's start from the stage 1. Considering the risk of the money laundering related to crypto, in 2018, the Money Laundering Control Act was amended to include VASPs as financial institutions. So this VASP must sign out an ML compliance statement before operations. And they are also required to conduct traditional money laundering preventive measures, such as KYC, record keeping, and STR reporting. And the one thing is very important, the FSC is empowered to conduct inspections, even offline or on-site inspections, and request information from the VASPs. So since that, there are several VASPs fined by the FSC after the inspection. For the stage 2, we facilitate the establishment of the VASP Association, which was established in August last year. And right now there are 23 members for now. And we also issue a guidance on the VASP. And based on this guidance, the VASP Association issues self-regulatory standards, including admission assessment, consumer protection, AML counter financing terrorism, and so on. So in this stage, we put more liability responsibility on the association. Hope they can enhance the internal control or governance of these VASPs. And last year we enter into stage 3, which is called registration system. We amended the ML law, which effective in November last year. Under the revised regulation, these VASPs are required to register with the FSC before conducting any business. However, for those VASPs having completed the ML statements, a 4 months transition period is provided for them to apply for registration. In addition, these VASPs are required to establish governance structure on legal compliance, business continuity, internal control, disclosure for significant events, and so on. As for the wallet storage, we just issued an order last month requiring that 80% of clients' crypto assets should be kept in a cold or a physical wallet. In other words, crypto assets may store in hot wallet up to 20%. And we also have enhanced actions against illegal or unregistered VASPs. So any VASPs which are unregistered will be subject to a criminal penalty up to 2 years. Before that, there's no criminal penalty. So under the registration system, there are many proportional supervision regulations. So according to different crypto activities, such as exchange between the cryptos and the fiat currencies, transfer of cryptos, safekeeping of cryptos. According to different activities, VASPs are required to register with the FSC and apply for different permission to conduct these different activities. So for all VASPs, there are general provisions applied to them, such as the compliance with the laws and regulations, IT system and cybersecurity, information disclosure, and custody of clients' assets, and procedures to deal with the customer compliance and record keeping and so on. So these are the general provisions for all VASPs. And for specific service providers, such as a VA exchanger, there are additional provisions for them to apply. For instance, for the trading platform or exchanges, this platform should establish review criteria and procedures for listing or delisting the cryptos. And they are required to announce rules for the crypto trading. And in addition, these platforms should take measures to prevent unfair trading and detect abnormal price and volume, so as to ensure the orderly function of the trading and to reduce the risk of market abuse. So there are also some provisions for VA transfers, custodian, and underwriters, as you can see on the slides for your reference. So this slide shows the current VASP markets in Taiwan. There are currently 23 eligible VASPs providing crypto services. Among these services providers, 14 are providing online services, and 4 of them are centralized exchanges, which we can call you bigger players in the market. And a few players dominate the trading volumes of crypto assets. And in addition, currently banks only have business relations with only online VASPs. So they are very cautious to establish business relations with these service providers. So we are right now entering to stage 4. We have just draft bespoke regulation recently and will be announced today. Yes, and this bespoke regulations will have a very comprehensive regulation or supervision requirements on the VASPs. Let me start with the next page definition. The definition of virtual assets is very similar to the MiCA or FATF. We exclude some assets used for maybe for utility functions, which is not included in this definition. I might use the next slide to introduce how we classify these cryptos. So if the assets on the DOT have features of financial instruments, then the existing financial regulations should be applied. For example, securities token offering, or STO, or tokenized bonds are regulated under Securities and Exchange Act. And if the crypto assets reference to fiat, then they will be classified as stablecoins. However, there are two kinds of stablecoins. Stablecoins issued in Taiwan are required to have a prior approval or admission by the FSC, which can be called FSC regulated stablecoins. And with respect to overseas stablecoins such as Tethers, USDT, these cryptos are required to be agreed or accepted by the FSC to trade on local service providers. And if crypto are neither financial instruments or stablecoins, then they can be classified as general virtual assets, as in the right-hand side of this slide. And however, several cryptos are excluded from the regulation, such as utility token, which don't have any speculative function or payment function. And also the non-fungible token are also excluded. And for the DeFi, centralized finance, we consider that DeFi ecosystem is relatively small in Taiwan, and under the P2P networks, there may not be an entity can be held accountable to regulation. So the fully decentralized service is excluded. And for the other general cryptos, they should be assessed by the investors before trading and should be accepted by the FSC as well. So since stablecoins are different, or this has distinct, which is a distinct subset of the cryptos, and can be considered as a private money-like instruments on DOT. So we have additional requirements or provisions applied to these stablecoins. For example, the issuance of stablecoins is required to be authorized, and the violation will be subject to 7 years of imprisonment, so which is very severe. And investors may not list or trade unapproved stablecoins on their platform. In addition, there should be sufficient reserve in local financial institutions. So this reserve cannot the reserve in other countries. There should be reserve in local financial institutions. And we have strict segregation requirements. We also have periodic audit on reserves, require CPA or other professionals to audit these reserves. And also the issuance of the stablecoin also subject to central bank supervision. So comparing to the current AML framework and the bespoke regulation, there will be a strict license framework in the bespoke regulation, and there will be more prudential requirements on the financial requirements, capital adequacy, and the other operation funds, very similar to the regulation of the security firms. So we take the proportional provisions for this different type of the service providers. We also enhance the legal liability of market manipulation or fraud. And there are also some client protection requirements in this bespoke act. So that's roughly the journey or 4-stage we are planning to regulate the cryptos. So as I mentioned in the beginning of the presentation, the regulation of the crypto markets still differs across countries. So Taiwan is still watching closely the regulatory framework adopted by other countries, and the landscape of the crypto regulation is rapidly developing. So I think not only as regulators worldwide are facing more challenges as markets get more complicated. So we, the FSC, will try to strike a balance between the innovation and the protection. Thank you, and I'm looking forward to the Q&A sessions to exchange views with other participants. Thank you.
Thank you, Director Huang, for your sharing. As you can see, there are a lot of works ongoing related to the crypto asset regulation in Taiwan. So let's move on to the Q&A session. I think we at least have 15 minutes or even more for the Q&A. And I have noticed some questions in the chat box. Please feel free to put your questions in the chat box or raise the hands. Whenever I see the hands, I will call on your name and allow you to post the questions. So let me start with the questions posted in the chat box. I think that question would more be addressed to Director Huang. So several questions related to the regulation of stablecoin, particularly the companies of USDT or USDC. Do they need to register themselves in Taiwan? Do they also need to keep their reserves in Taiwan's financial institution? Is that what the new crypto law is going to address related to the international stablecoins? I think there are some clarifications that perhaps Director Huang can make related to that question. So maybe I will first refer the question to Director Huang first, please.
Thank you, Alex. According to our draft, the Tether's USDT, they are not required to have reserve in Taiwan. As I mentioned earlier, there are two kinds of stablecoins. The issuance of stablecoins will be required to have reserve in Taiwan's local financial institutions. But however, for other current stablecoins, which has been traded globally, there will be a recognition or approval process, and then they can be listed on local platforms. So it's a different process, and so in short, they are not required to have reserves in Taiwan.
Thank you. And I think there is a follow-up question by Peter related to the stablecoins as well. If he understands correctly, there are two categories for stablecoins, the domestic one and the overseas one. Could you please share the details, the requirement for both FSC regulated stablecoins and overseas stablecoins? I think that question is also addressed to Director Huang, so please.
Okay. The first kind of stablecoin which I mentioned, which is issued and distributed in Taiwan, should get the private approval by FSC and the central bank, and can only be referenced to fiat. However, for other stablecoins which has been circulated around the world, there will be a process to see whether these regulations of these stablecoins in other countries have similar or equivalent requirements. Then we can allow them to trade it on local markets. So there are different approaches to regulate these two different kinds of the stablecoins. I would say that the Japanese approach, the approach taken by Japanese JFSA is very similar as our proposal, which they allow this USDT or USDC are allowed to trade in local markets. However, they have to get the approval or accepted by regulators.
Thank you. So yeah, I think in some the overseas stablecoins can be allowed to be traded in Taiwan's service providers to the extent that they are accepted or cleared by the regulator to be on board in the domestic service provider. So it's not the case that the USDT or USDC needs to file their approval so as to be traded. Instead, those are the matters of the service providers. The service providers need to be accepted or approved by the regulator so as to trade those USDT or USDC. I think that's the general position of the Financial Supervisory Commission. Are there any follow-up questions or other questions? Yeah. Yeah, I noticed a separate question from I think Sonia from Binance.
Yeah.
So two questions from Sonia. So first question is, we recognize that there is a delicate balance between supporting domestic industry and maintaining an open competitive market, that in Taiwanese users have access to platforms with different advantages. And they believe that it is important to have a diverse range of participants in any virtual asset ecosystem. So how does the authority intend on balancing between protecting the domestic participants with the benefits of global international player participation? So the first question somehow relates to the balance between domestic and global service providers. And the second question relates to as crypto and blockchain continues to evolve quickly, it's important for service providers to have the flexibility to adopt their approaches and tools in order to offer safer and more efficient services to users. Given that this is a nascent industry and participants have different models depending on their global reach, does the authority maintain a principles-based, open and adapted attitude toward evaluating such differences, such as liquidity, broker model, as well as the core regulatory objectives around user protection and AML compliance are effectively met? So I guess the second question relates to more about the regulatory mentality. So is it a principle-based approach, or is it other approaches that the Financial Supervisory Commission is thinking about? So I guess these two questions are also referred to Director Huang. So would you mind starting with your answers?
Thank you, Professor Yang. There are quite a few questions. I try to respond to all these queries. First, whether we are taking a principle-based approach or rule-based approach, I would say that before the bespoke regulation, at current stage is more like a principle-based. There are only some principles and guidance provided for the BESPs, but while we are entering to a new stage, under this bespoke regulation is more like a rule-based regulation as we regulate the financial institutions or security firms. So this is the first. We might take a more rule-based regulation on the crypto service providers. And as for the how to balance the different goals between the market developments and the consumer protection, as I have mentioned earlier, which is very challenging for all the regulators. We propose enhance their supervision. We also noticed that some of the players are withdrawing from the markets. They think it is the legal cost or a legal responsibility might be too high for them. So some smaller service providers are not stay in the markets. So we are watching closely how to balance these different goals while we are trying to protect investors and try not to stifle the developments of this important market. We also think these crypto markets is very important in Taiwan. We wish and expect them to develop a more sound way. And another question is that whether the services are provided to clients outside Taiwan, will they be regulated? According to the this bespoke act, we only regulate the service providers to local clients or activities conducted in Taiwan will be subject to the regulations. So if there are no specific activities such as solicitation, making advertisements, or establish website in Taiwan, then maybe this kind of online service providers may not subject to the supervision of this bespoke law. However, this is still there's not a specific boundary or line to justify that. So we might watch closely how other countries to identify what kind of activities are conducted in your jurisdiction, and they are subject to the supervision of the regulator.
Thank you, Alex. Very efficient answers, which also cover the next question posed by JL. So perhaps I should turn to Director General Hu a little bit for the following questions. So I think there are two. There is a question addressing to Director General Hu. So the question is from Cui Jiawei from MyCoin. So since you are sharing, you have mentioned RWA exchange. Could you elaborate more on the policy or regulations about the RWA? So, Brenda, can you hear me?
Yes, thank you. Thank you for the question. As I mentioned that we have a RWA tokenization POC currently processing with our financial institutions and TDCC. And from the process, we noticed that there is a Japanese model, or we can have a different kind of a model. For the Japanese model, it's like RWA trading platform. The platform, they can also act as the trading platform or the settlement platform, and also they act as the RWA custody services. So all in one platform. And with this kind of platform, we think for the regulators, we think there is no check and balance there. So probably for our supervisory stance, we think it's not very safe. So we think there should be a third party, independent party that will have those kind of trading in one exchange that we can trust. So right now we are asking our Taiwan Stock Exchange to have a look at the Switzerland. They have a SDX RWA exchange. And what they are doing is they try to have those issuers to have a different kind of RWA tokenization, and they trade on the exchange. And so we are thinking that probably this kind of approach is what we think will similar to our traditional stock exchange, but we can expand that. We can expand its business, and so that's probably why we want to have this RWA token exchange. And regarding the regulations, because we have to see the underlying asset behind the RWA. For example, if we issue the bond or mutual fund, etc., those are the securities. So they have to follow the Securities Exchange Act. And also for the mutual fund, they have to follow the Securities Investment Advisory Act. So that you have to see the underlying asset of that RWA. So if they are related to securities, that will be fall into our commission's regulations. But if they are other kind of assets, for example, like if they are the spot commercial type, for example, like wine, or for example, like the gold, etc., probably they are related to different laws or regulations. So they probably are not in our jurisdiction. So I think that answers your questions.
Thank you, Director General Hu. So I noticed that our time is approaching to 11 o'clock, but if everyone agrees, please allow me to finish the questions on the chat boxes. So there are several questions on the way. So the is from Jude from Fireblocks. There are two questions. The first one is for payment companies facilitating cross-border payments via stablecoins. Would they be subject to the FSC regulation? And the second question is for RWA asset trading. Would it be settled via stablecoin? I think these two questions somehow gets into the overlapping parts of our two speakers. Maybe I would invite Director Huang to answer first and see whether Director General Hu has any supplement. Director Huang, does that work?
Yes. The question is regarding how can we use the stablecoin to as payment for cross countries. We don't have any strict regulation right now to prevent from clients using the stable coins such as USDT as a tool for making a payment on the website. However, I mentioned that the payment function of the stable coins are highly regulated by regulators, including the central bank. So there might be some additional requirements in the future based on maybe on case-by-case basis and in a specific situation, we can make a further judgment. But for now, there are no general requirements to restrict the client to use the USDT to conducting the cross-jurisdiction tradings online.
And Director General Hu, do you have anything to add on the RWA asset trading via stablecoin?
Yes, I think right. The reason that we try to put stablecoin as a chapter in our VASP Act because we think stablecoin will be a very good tool to connect the physical world to the virtual world, so that in the future we think we can use stablecoin to settle those kind of RWA assets. But as right now, I would like to mention that RWA, its definition, if you see the Virtual Asset Service Provider Act, if you see the definition of a virtual asset, RWA is not included in the virtual asset. So probably still for the RWA, we will have to see the underlying asset is that securities, then will fall into the Securities Exchange Act. So just like to point it out.
Thank you. The next question comes from Jesse from NCCU. So the question is about, given that the US has emphasized Bitcoin's role as digital gold in its reserve strategy, how does this impact Taiwan's perspective on CBDCs and stablecoin regulation? So I guess the question is more to Director Huang. So maybe Director Huang to start first.
Thank you. This question should be answered by Central Bank of Taiwan because it's a very high-level question. According to statements made by the central bank, I think 2 weeks ago, they still think the Bitcoin is a commodity instead of fiat currency or sort of e-money, and they also remind that local investors, the speculative nature of the Bitcoin or other virtual assets are still very high. Yes, according to the market's developments for the past few months. So basically, right now we don't see any strategic view from our government or regulators that can deem the Bitcoin as a strategic reserve in Taiwan. However, we think the developments in states is very interesting developments right now, and we're watching closely other regulatory measures taken by the United States. Actually, after all, it's a very big market, in the crypto world. Thank you.
And the next question comes from Karen to Director General Hu. So the question is, we used to have recognized FIDO, the global standards. Would you have other items on FSC roadmap for embracing kind of new or innovative actions in the near future?
I don't quite sure I understand the question, but if you are asking if we have any policies or measures that related to FIDO, this kind of standards, just I mentioned in my presentation, we are going to roll out the Financial FASTA ID Authentication Center, and that means when the banks or other financial institutions, they use this kind of FIDO server, they can verify their customers' ID with biometrics or other pattern type of credentials, etc. So they can verify the customer's data. And other parties, for example, like the relying parties, they can trust what they have been verified with those banks, so that customers won't need to every time when they apply a new financial services need to go through the long journey of the ID verification. So I think that's what we are right now pushing forward. All the financial institutions can join into the Financial FASTA ID Authentication Center.
Thank you, Brenda. I think the last question goes to Director Huang again, the question from Sonia. So is the authority concerned with protecting local participants from the entry of global participants, or does the authority maintain an open attitude as long as key regulatory requirements are met to allow Taiwanese users to have more choices? I think this is a very nice question to conclude this webinar, right? This is a webinar about the Asian FinTech companies. So it is nice to conclude this webinar by this question, the balance between local participants and global participants. So Director Huang, please.
Thank you, Professor Yang. I would say that we take an open attitude, and we welcome any foreign players to come to Taiwan, subject to same regulations as also apply to other RESPs in Taiwan. However, I noticed that these big players right now, they have different ways to provide this kind of crypto services. For example, some of the transaction will be conducted in their global platforms. So this might cause some concerns whether we can watch the some abnormal activities transacted in overseas platforms. So this will be an issue for us. Another issue is that some of the hot wallets will be under custody of the foreign organization, or be outsourced to their global wallet systems. So we might impose additional requirements for these international players if they are wishing to have a presence in Taiwan. So first of all, they were subject to same regulations in Taiwan. Second, if there are specific issues we concerned, we might impose additional requirements for them. However, we still have an open attitude for them to come to Taiwan to conduct crypto business. Thank you.
Thank you. It has been 10 minutes past for our expected schedule, but I'm sure that everybody has learned a lot and benefited a lot from our two distinguished speakers. So if I may, I would like to conclude this session and invite everyone to give a big applause to our two speakers again. Of course, virtually, so you don't really need to open your microphone to give an applause. So thank you, everyone. And may I pass the floor to our chairperson, Tsai?
Yes. Yeah, thank you, Professor Yang and speakers, Director Huang and Director Hu. I'm very pleasant to have this kind of opportunities to let, especially for friends from AFA and from overseas. You will see how open-minded of Taiwan regulators, and we truly believe the team, not just in the public sector, but also in private sector, we work together. We are trying to have a more friendly environment for these industries. So any of you are interested in cooperate with Taiwanese company, or you are willing to have any business in Taiwan, I wish you will learn a lot from today's seminar. And our government regulators is very willing to open opportunities to foreign companies to join the business with us. Thank you very much for Professor Yang, and thank you very much for our speaker, and thank you for all the participants today joining our session. Thank you.
Thank you.
Thank you
Thank
all.
you.
Thank you. Bye-bye.
谢谢，谢谢，感谢，感谢。等他们都下线了，感谢，感谢。